Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at some of the ticker symbols that were in play today or that are setting up. Okay, first up is DCTH. Okay, really nice bounce today, so congrats to everybody that caught the last video. Closed up 62%, almost 63%. That was a really sweet bounce. It did confirm the bullish three gap ups reversal pattern that had formed yesterday. Um, Bulls want to see RSI get above 50. Notice yesterday Fasto was at 5, well below 20. Now it closed above 20 today. Bulls want to see Fasto get it back above 50. There was a bullish crossover here on ADX with plus DA crossing ADX to the upside. So Bulls want to see that green line cross the red line to the upside. Okay, so there was a bullish three gap downs reversal pattern form. There's the 1, 2, 3 gaps, and then today there was a big bounce. You can see that there are no unfilled gaps in this chart. The candles did close above, today's candle did close above EMA's 4 and 8, but it closed right below the 50-day simple moving average at 12. So that's going to be the key level to break. It has to get above that, and EMA 13 is at that same level in order to head higher. Notice that it's lined up with this descending resistance line. So, and then just above 12 is the middle Bollinger Band at 14. That's going to be the big level. If you look back here, the last close above the middle Bollinger Band was on the 11th. So once it gets back above the middle Bollinger Band, then it could possibly start a new uptrend. So this was a good start today. If it fails to break the 50-day simple moving average, you could see it pull back. If it drops back below EMA 4, currently at 10, that would be a red flag signaling potential more downside risk and continuation of that downtrend. Notice that the gap yesterday, the gap below did not fill. When I say there's no gaps, there's no unfilled gaps above, but below there is still a small unfilled gap at down here to 6. So until the share price hits 6, this gap back here will not have filled. Okay, so yeah, so this is a nice move. We'll have to see it can follow through and get a new uptrend going. There was a nice bullish volume spike. MACD down here on the 8, 13, and 5 is pinched, so keep an eye out for a bullish crossover. Okay, let's look at AEZS. Okay, this stock is bounced. Okay, it bounced today and it formed a bullish engulfing reversal pattern. You can see here it bounced off of the 50 on RSI, so that's good. You want to see it stay above 50. You've got a crossover starting on Fasto. Down here, the bounce was off of the middle Bollinger Band. So that's the dotted purple line at 172. That is the key level to hold. Notice it closed right above the 100-day simple moving average at 178. Bulls want to see candles stay above that level, and then it needs to get above EMA 8 at 189. If it can do that, then it can potentially run back up here to this 200-day simple moving average. If the middle Bollinger Band fails to hold and it fails to break the 100-day simple moving average, you could see a pullback. There is an unfilled gap down here between these two candles, and so you have got the 50-day simple moving average at 130 as a big support level below, but the share price would have to drop all the way down here to about 105 to fill the gap. Okay, so the bounce today was on light volume. If you look down here, so bulls are going to want to see more volume behind the move to push through resistance. If you look here on the AEZS 15-minute chart, it heated up today on the move above the middle Bollinger Band and the 50-day simple moving average. It came up and it hit the 100 or the 50 simple moving average. It came up and hit the 100 simple moving average here, the gold line currently at 184, and it failed to turn that level into support and pulled back below it into the close. So that's going to be the key level to break tomorrow. It needs to get above the 100 simple moving average, and it needs to get back above the middle Bollinger Band, the 181 to 184 level. If those levels turn into resistance, you could see a pullback. The 50 simple moving average is just below at 176. That level needs to hold. If that breaks, you could see a big drop down to the 160s. So upside potential if the 100 simple moving average breaks. There's going to be downside risk if the 50 simple moving average support level breaks. Okay, so keep an eye on CHFS. This chart is heating up. It's back above 50 on RSI, back above 50 on Fasto. They both have more room to run until overbought levels. Keep an eye out for a crossover on ADX. Okay, so this is a older chart that we had posted before, and this is an old chart we created before, and now you can see here that this is the best it's looked since the big pullback. Okay, since it dropped below the middle Bollinger Band, it finally today closed back above the middle Bollinger Band, currently at 0.74. So that's going to be the key level to hold. If that level can turn into support, then a new uptrend could begin. Notice it came down and it didn't quite fill the gap. The gap fill would be down here at just about 64. Okay, so there's a gap between these two candles. So yeah, so CHFS is heating back up after it made this big move back here in the end of June. Notice after the big move, it pretty much sold off all the way. You know, it had a couple of little bounces here, and then finally, you know, it found support, and then it had the key is it had a volume spike today. If you look down here at volume, so it was the largest volume day in the last just about 4 weeks here, and so that's usually a good sign that you know, there was money behind the move. There is an upper wick that did form on today's candle. So going forward, CHFS will be in play if it can stay above the middle Bollinger Band. If it goes back, if it closes back below the middle Bollinger Band, that would signal possible more consolidation. Okay, take a look at OCRX. Okay, this is a thinly traded stock, but it is heating up. It had a bounce down here off of support, off of lower Bollinger Band support, and then it came down here and it tested this prior support level at 95. Notice that was a key level that held back in June, and then today there was a close above EMA4, and it did confirm this bullish Harami reversal pattern that formed on August 1st here, and so that pattern was confirmed. There's a close above EMA4. So next up is this EMA8 and the 50-day simple moving average at 111. If you can get above both those levels, then the middle Bollinger Band could be back on deck. If you notice back here when there was a big pullback, the close above EMA4 here on the 19th signaled the start of this new uptrend. So we'll see if this close above EMA4 will signal more upside potential for thinly traded OCRX. Okay, so now let's look at CYTR. Keep an eye on this stock for a potential bounce tomorrow. It looks like it's setting up. This is another chart that we've posted before in the past, and so we can look and see the prior. These are previous annotations, but notice RSI is holding 50. You've got Fasto down here testing that 20 level. So the big move here is the pullback after failing to stay above this double top level. Okay, so the share price came up, it broke the double top level here on the end of July, and then now it's pulled back with 3 red candles in a row. It did drop below the 300-day simple moving average at 73 basically, and then it came down and it bounced off of the 50-day simple moving average in the middle Bollinger Band. So those are the key levels to hold at 65. If it can hold 65, then you could see a technical bounce. Okay, so it's set up for that. If this level fails to hold, then you could see a drop all the way down here to the 100-day simple moving average down here at about 57. So it's going to be really important to keep this uptrend going, that the middle Bollinger Band holds here. If it does, you know, this could be a good setup for a technical bounce. If you look here at the CYTR 15-minute chart, you can see here that it's trying to turn the middle Bollinger Band into support here into the close. That's the dotted purple line. It did pull back below, so the key level tomorrow on this chart is going to be the 69 level. So if it can, if candles start forming above the middle Bollinger Band and the 300 simple moving average at 69, that could signal that the bounce play has started. If candles continue to form below that level, it will be a risk to hold, signaling that it's still consolidating. Okay, and one more to keep an eye on. Take a look at ERBB. Okay, this stock has an insane share structure, just a crazy large AS and OS. But there was news out today that they bought a small town in California. Yeah, so check out their recent PR. We'll see if this can get something going. It did have its largest volume day in a long time, and it did break resistance. If you look at the 1-year chart, you can see here it has had some big runs in the the past, and this is the 1-year chart, so you can see it had its largest volume day ever, or not ever, but for this year in the last 52 weeks, and then now the chart is heating up. So keep an eye on it. We'll see if it can get something going. Okay, thank you very much for viewing this video. Check us out at mychartcoach.com and our YouTube channel at mychartcoach.com for more charts and technical analysis.